Good evening, this is Ryan Mallory for SharePlanner.com. Today is August 26, 2010. Got a lot to look forward to tomorrow with the GDP coming out. That will definitely shape the market as we head into the Friday's trading session. GDP has been something that investors have had their eyes on now for about a couple of weeks, and if it's a bad report tomorrow, I can pretty much guarantee you, well, I don't want to guarantee you because that's usually the kiss of death for me, but I will say this: a bad report, similar to like the missed expectations with new home sales and existing home sales and stuff like that. I mean, you have that kind of a miss tomorrow in GDP, and you could see a significant sell-off. So that is definitely something that I am keeping my eye on. I did not hedge my position at all, or any of my positions at all today, going into tomorrow's trading session. I did get out of one stock today. I got a EUO. I didn't like the fact that it broke through that 50-day moving average. That was part of my thesis for why I was trading it. When it broke through it decisively like it did in the early morning, I had enough of it. And quite honestly, I probably deserve to be flogged if I get into another currency-related ETF, because I don't think I've ever had any success in ETFs correlated with a particular currency, whether it's the U.S. dollar or the euro. It's just not my cup of tea. So knowing that and knowing that my thesis wasn't really holding up, I got out of that and I swapped it out for another stock, which was Dillard's Department Stores, symbol DDS. It didn't do too much today after I got into it, but it did finish down a little bit more than about 1%, a little less than 1%, and finished down today. So about basically in line with the general market. But one of the things though that I'm becoming very concerned with is this tendency that the bulls have to buy every dip in that comes around. I mean, you've seen it a bunch this week and in previous weeks. However, I will say this though, this week in particular, I've noticed where after they buy the dip, the bulls tend to jump in and push the markets a little bit lower. We got that today. It looked like we were going to have an end of the day rally, and instead the bears actually jumped in and countered the bull rally and pushed the market back down towards its lows. That's a good sign. Basically what that means is that the bears are almost like luring the bulls into a trap here. They know that they're going to try to rally it up, and they're going to use that as an opportunity to short more positions. So and that's basically what they did today. Towards the end, they expected an end of day rally. As soon as that happened, bears jumped on it and pushed the market lower. That means the bears are running with a little bit more confidence than what we've seen lately. So let's look at the chart here. As you can see here, the 1040 is going to be a testing ground tomorrow. A bad GDP report once again pushes the market right through that, and then we're going down to the 1010 level here on the S&P, which represents the July 1st lows in the market. We hit that. I think you could probably expect some kind of a bounce there, but there's nothing certain. I mean, we could see anything at this point. But the 1040, I want to see us break it tomorrow. Tomorrow will be an opportunity to test it for the second time this week. We did drop below it yesterday, but we rallied back as soon as we broke through it. So that was a failed attempt. We need to have another attempt here to where we actually push below it and close below it. So that is what I will be keeping my eyes on here. A few other charts, the T2108 that I talk a lot about. As you can see here, we're quickly approaching. I'm going to look at it from a non-logarithmic standpoint, but as you can see here, we're quickly approaching some oversold conditions here on the T2108. A couple other positions that I got. TICC, my long position rebounded a little bit today, but put a little bit of a shooting star there at 901. So that could be problematic going forward. DGX, short position, trading down nicely. I don't see any reason to cover it yet, but I probably will be tightening my stops tomorrow morning, which you can find in the morning's trading plan. FCN, another stock there too, where it continues to move lower. Urban, this is my favorite short position so far. We have got I've got a sell price at 30.44, so that would put it close to the lower channel here. So I'll go ahead and take my gains. That would be a 2R return against what I risked on the trade. But anyways, we got a nice bearish engulfing pattern here today after yesterday's rally in the stock. OMI, piercing pattern, continues to move lower, similar channel. Adobe Systems, I really like this one. I would have been even more happier if this thing could have closed a little bit more towards its lows of the day, but at one point it was definitely showing signs of a breakdown through this out of this consolidation. But as you can see here, the downward trend line is still very nicely intact. So EUO, I mentioned earlier that I sold out of this ultra short stock. You can see here this 50-day moving average wasn't something that I was willing to hold any longer after it broke it. DDS, Dillards, this is my new short today. Nice series of consecutive higher lows and lower lows. You have resistance right above it. You also have a 20-day moving average. You can't see that on this chart, but there is a 20-day moving average that sits right on top of it as well. So you got the short term, the intermediate, and the long term moving averages all acting as overhead resistance, as well as a downward trend line too. So that's it for today. I hope you guys all have a great evening and get ready for tomorrow. It should be a dynamic day one way or the other.